Look, Bitcoin is breaking out of this bearish rising wedge pattern. Is this just a fake out, or are we about to crash towards $85,000? Let's analyze. Hello ladies and gentlemen, this is Simon from Maker to Paradise. Previous video 2 days ago I told you Bitcoin is about to pump back towards this key high time frame resistance zone. I have also shared with you the trajectory. As you can see right now, Bitcoin did exactly that. We are back at our key high time frame resistance zone. We've been also covering the lower time frames. For example, 1 hour low time frame analysis revealed to us very clearly the next path of Bitcoin, and as you can see right now we are consolidating inside of it. Also in the previous video I have been covering for you the accumulated funding crates that supported the bias that Bitcoin will go to the upside. As you can see, we have been covering the negative funding crates that meant that loads of over-leveraged crypto noobs being shorting at the support zones, right? So that was another confirmation that whales will take advantage of it and push the price to the upside. They did, and as you can see right now we are in a greed mode, but loads of short positions are out because on Binance, which is the highest volume exchange at the moment, not with the best trading liquidity, but for some reason with the best marketing, is right now back at positive funding rates. That means lots of people are longing at resistance, ladies and gentlemen, and you know that this is very often the right recipe for getting rejected, right? By the way, if you want to know what exchanges we are using in the ParadiseTeam, links with discounts on fees and the exchanges we are trading on with ParadiseTeam are below this video in the description. So right now let's calculate the probabilities and let's understand what's with the highest probability will really happen next with Bitcoin. Let's go through our daily drill just to understand the context, right? You know, since 1 to 2 months ago we have been changing our biases from bullish to bearish. So I have been telling you this is the end. We are about to correct towards $44,000. This is the end, not for Bitcoin, just of this impulse. Just to be very clear, right? I don't think Bitcoin is about to end. I'm actually a big believer in Bitcoin. I'm in Bitcoin since 2016, but I'm also a trader, so I'm trading the waves, right? And as you know, the major supercycle wave on ultra high time frame chart we have just finished. That was this impulsive wave, right? That was finished with this ending diagonal at the top. We have been analyzing that in previous videos before this crash started, and at this moment I believe we are finishing the first A wave of a zigzag that will probably finish at around $72,000. Then we will have one more retest of that $93,000, and then the C wave will take us towards $44,000. This can be a correction made out of a simple zigzag, but it can also be a double zigzag, triple zigzag, double three, triple three. We don't know yet, right? Right now we are forming a beautiful impulse that we will be covering in lower time frames, and it seems like it's the first impulse of a zigzag. Okay, after this zigzag we are obviously gonna have the third wave on the supercycle degree. So this is the first, second, and then we will have a third wave towards $240,000, ladies and gentlemen. So we will shift our bias back to strong bulls right here at $44,000, where everybody else will be calling for a further correction. The same way we have been turning here into bulls, where most of the people were already out of the market and in a huge disbelief, we will be doing the same thing right here, right? So psychologically it's not easy to be turning bearish when everybody else is bullish, and also here it will not be easy to turn bullish when everybody else will start to get bearish, right? It's because we humans have a herd mentality, so we basically try to copy what everybody else is doing. It was safe to do it like 1,000 years ago, because when we have been living in groups in woods, right? When we saw somebody else eating these berries, we ate them as well because it was safe to do. We have seen on our own eyes this person didn't die after eating those, right? So it's probably safe for us as well. So this herd mentality, like let's copy what everybody else is doing to be safe, is in us, right? So that's why it's very hard to fight it, have these contrarian opinions, and that's why lots of people are not profitable in the crypto markets for long term. Okay, it's not easy. It's not easy, ladies and gentlemen, but I'm doing my best to explain you these kind of things so you can be a professional traders like us, and it can be easy for you as well. So right now we are looking at high time frame analysis. As you can see, we are forming the impulse motive mode wave, which is the A wave of the zigzag, this one, right? And this can actually be also a leading diagonal. The only way how the leading diagonal differs from the impulse is that the fourth wave, this one is the first wave, second wave, third wave, and the fourth wave, as you can see, went into the territory of the first and second wave. But the structure of each single wave is the same. This is the only difference. So this can actually be also a leading diagonal. And because the leading diagonal has a beautiful upper and lower boundaries, we can actually use that in our advantage. We can create a trend line between the second and fourth wave. This is the upper boundary, and we can put another trend line here connecting the first and third wave right here, and we can see that this ending diagonal that is also made out of 5 waves is actually showcasing us where probably the 5th wave is going to end, right? And it's perfectly synergizing with our previous videos analysis, where I've been telling you that I believe that $72,000 is very probable, okay? Ladies and gentlemen, so it seems like we are about to start the 5th wave right now. In the previous videos, we have been together breaking down this 5th wave that is about to come into 5 waves, 5 smaller waves. Why? Because we understand that either if it is the impulse mode or leading diagonal mode, both of the 5 waves are made by a motive mode, right? And in both cases, the 5th wave can subdivide itself into 5 waves of an impulse or ending diagonal, okay? I do believe it is a classic impulse just because this first wave that we had right here, this is the sharp crash that happened right here, formed in an impulsive mode, right? And the ending diagonal itself has all waves made out of corrective mode. So I believe this is going to be a classic impulse, and I do believe that the first wave is already finished. The second wave right now, this one, this wave right here, is finished also by retesting the key high time frame resistance together with the moving average trend line, and we are about to start this third impulsive wave, this one that will finish at around $77,000. So let's zoom in and break down this wave on a lower time frame. But before we do so, I also want to share with you one thing why I do believe that we are about to have a correction, not only because we are at resistance because of the funding rates, but also because we are watching on-chain data, what are the whales are doing, but also take a look at the volume. Together with price going up, you can see the volume is decreasing. That means the pullback is very weak, bulls are not very strong, and it's about to start reversing and bears can start taking over. Together with that, we can actually see a hidden bearish divergence. Why? Because we are zooming in into our MACD indicator. This oscillator is showing us that the momentum is increasing, but the price failed to make a higher high, unlike the oscillator that made a higher high. This is a classic bearish hidden divergence when the price is making lower high, but the indicator is making a higher high. That means basically that somebody is buying, right? And you know probably who, right? Because of the funding rate, because of the increased greed in the market. It's not some smart players, it's not whales, right? It's some retail. So the momentum is increasing, there is buying pressure, but somebody is holding the price down, right? Probably the whales are filling up their sell limit orders. So this is just another points for the bears, for the probability that we are about to start correcting and reversing this small uptrend pullback. So let's zoom in right now into this wave that is probably starting right now, and right now we are on a medium time frame, ladies and gentlemen. What we can immediately see is a shooting star together with bearish engulfing pattern, right? So can you see this? A beautiful shooting star, another textbook example of a beautiful pattern. As you can see, this long upper candlestick wick with just a very small body is usually at the top of the uptrends and signals a potential reverse in opposite direction, together with a bearish engulfing confirmation, which is this candle that is basically closed below the body of the shooting star, is confirming that this shooting star is very strong, and it's really telling us that we are about to reverse. Not the certainty, but it just increases the probabilities, right? As a professional traders, all we care about are probabilities in the market, then finding a great risk to reward opportunities, wait for confirmations and go for it. Fearlessly executing just the absolutely most professional trade setups. You can see also on a medium time frame much clearer that with this grind to the upside we had a decreased volume, as you can see right here. Since this big green candle, the volume was just decreasing, unlike the price, so that is another divergence. Looking at the oscillators right here, stochastic RSI, classic RSI, or our beloved MACD indicator, we don't see any bearish divergence yet. But if we zoom in on a low time frame, we can actually see a triple bearish divergence, right? As you can see, when the price been making a higher high after higher high, the momentum right here on a low time frame was decreasing. Together with this bearish cross, it just adds up to the bearish probabilities that we are about to start a correction, because on low time frame, clearly the momentum of bulls show how the bulls are very weak and not able to sustain their control of the market. Two important levels right here I've charted for you. One important level is $85,000. I will be talking about why once we shift our focus into ultra low time frame view, but also on low time frame you can see that this was previously working as a resistance until we broke above it, right? So once we start going back to this level, it will be working as a support, okay? Because it will be a classic resistance to support flip. And another important level is $80,000, where I believe where we will finish the cycle degree third wave. That is basically right here at around middle of the supercycle degree wave. And then this is not that important on a weekly, but very important if you are a day or swing trader for your possible targets. So as you know, this ride towards $77,000 will take a form of an impulse, right? Because it's the third wave of the higher degree impulse, and this third wave cannot take a form of leading or ending diagonal. It is always an impulse. So I believe the levels are $85,000 for wave 1, retest of around $93,000, then third wave will end up at around $80,000 and the full impulse will end up at $77,000 right here, ladies and gentlemen. So right now we will be analyzing and take a great look at why this $85,000 level is so important, ladies and gentlemen. So first of all, it's this resistance support flip, and if we zoom in into our contracting triangle, aka rising wedge pattern, ladies and gentlemen, that is beautifully made out of 5 waves. Let's calculate it with me. It is a corrective mode wave that is basically forming this secondary higher degree wave of an impulse. All right, so you know that the contracting triangles from the Elliott wave theory, they are a corrective mode patterns, right? Contracting triangles are only appearing at a second or fourth wave of an impulse or in a B wave of a zigzag. Sometimes they are also in triple zigzag or double three, but right now what's important to understand is that they are corrective patterns, okay? And once they are finished, they are continuing the movement of the previous trend. So the previous trend was bearish, that was the previous main trend, okay? That's bearish. This is just a correction of this bearish trend. So after we are breaking below this rising wedge pattern, we will continue in the bearish trend. Why? Because this is just a corrective pattern, okay? This contracting triangle, aka rising wedge pattern, is consisting out of 5 waves. So let's see if we got them. 1, 2, 3, 4, 5, aka A, B, C, D, E. We got them, and after E wave, you can see that we are breaking down. So this is very convincing that this is going to not be a fake out. As you can see, also after we have broke down from it, we have also got this nice retest. Now there is a possibility that we can be retesting a few more times the section around $91,000, $92,000. The invalidation would be a breakout above this E wave wave and start turning the $93,000 from resistance into support. I do believe this is a very low probability play right now, so I'm focused on believing that this breakdown is a real one, and the target of the rising wedge patterns breakdowns can be very easily calculated, and we have this in our MCP University blog, which you can use for free. Links are in the description. So basically you take the depth of the triangle first wave that started this rising wedge pattern, and then you will take the measurement to the breakout point, and you can basically understand where with the highest probability the next support will be, okay, where the target of the breakdown will be. So let's do exactly that. So it started from here. This was the first A wave. We put this tool to the breakout point, and as you can see, absolutely beautifully it synergized with the $85,000, ladies and gentlemen. So I do believe that we are about to have this very nice movement towards $85,000 next, and from the around current price it's around 7% crash. What's also convincing me that we will right now continue towards $85,000 is another bearish divergence right here. As you can see, the price is making lower high, however the MACD is making on the histogram a higher high, so that is the same thing of what we have on high time frame that I've shared with you before, right? Together with that, if we take a look at our liquidation heat map, we can see a beautiful, look how brightly it shines, beautiful liquidation pool at exactly that $85,000, ladies and gentlemen. So there is loads of stop losses, loads of liquidation levels of over leveraged noob long positions that are very juicy for the whales just to take out. So that's it for today, ladies and gentlemen. Also, as always, it's a giveaway Thursday, and this time you can win an exclusive access to our MCP Extras private membership, ladies and gentlemen, where we share with you what the whales are doing live in the market. The giveaway question is, what's the single most important skill a professional trader must master? Write it down below in the comment section. If your comment gets most of the likes by Monday evening, you are the winner, okay? To participate in this giveaway, you just need to write your answer in the comment section below, subscribe, like, share this video on any of your social media, like one other comment other than yours, and you are in the giveaway. As always, we are announcing the winners in our MCP Stream Telegram channel, so go there, be there, stay ready, because you can be the next winner. It was a pleasure analyzing the market with you today again. I wish you a beautiful rest of the day, and I will see you again on Saturday. Cheers!